These are the same mistakes being made yet again. On top of these mistakes, we are seeing new creations from the financial system, inevitably bringing it to its knees. But knowing the underlying truth is essential. Central bankers created this system of debt, and they are using it against us. You came here for the truth, so let me unveil that for you. Let's get into this right away. About 42% of Americans will retire broke. You can see the chart on your right-hand side. Broke are those who have $10,000 or less saved for retirement. So you have a large group of people who go to work every single day. They sit in traffic, they're working their 9 to 5, and by the time they get home, they have only a few pennies saved. Many people would suggest that this lack of savings, or the fact that they are quote-unquote broke, is their own fault. They have squandered their money. I would suggest that some people definitely do squander their money. But there are other people out there who can't make ends meet. And that is the direct result of central banking. It's designed that way intentionally. So as time goes on, the dollars buy less and less and less. That's the way it is. At the same time, you have people that don't save today because they don't get any interest on their savings. So they're looking to put their money elsewhere. It's forcing them to spend their money in a way. Look at this. More than half of millennials have less than $10,000 saved for retirement. About 19% have $0 saved. About 39% have less than $10,000 saved. Now, to cover millennials, this is a young group of people, according to this, ages 18 to 34. These individuals haven't been able to save. They would suggest, they're younger, they're worrying about other things, they're buying their homes, they're going on vacations and this and that. Okay, hold that thought for a moment. Why aren't Americans saving for retirement? So there are different reasons here based on the study that was done. Primarily, I don't make enough money. That's what the average American said. And that's central banking right there. Some people curiously believe that they won't need retirement savings. That's interesting. This is the one that I thought would be the reason why, but actually it's a very, very small reason. 5% of people said I'm prioritizing paying down debt. That's it, just 5%. My job doesn't offer a retirement plan. So you have to rely on your government, you have to rely on your corporation, your parents, anything else. That's what people do. Never, ever rely on anybody else. I'm struggling to pay bills. Trust me, I hear from people every day talking about this. And I use my retirement savings for an emergency. All these different reasons makes up a very, very large percentage here that we can look at and suggest, okay, well, what exactly has happened? Why are people in this situation? Are they not saving for retirement because they're paying down their debt? Absolutely not. That's not the case. We can see that here. So thinking about this now, should you have a retirement account? And I'm going to be a contrarian here in this. Yet again, I'm a contrarian of contrarians, in fact. I think you should not have a retirement account. And this is my own opinion, of course. If you have a retirement account, if you're a millennial especially, and you are putting money into a 401k, RRSP, or super, depending on where you live, retirement accounts, you're basically giving your money to somebody else over a period of time. Let's say it's every paycheck you're putting money in. You're basically hoping that one day you get that money back. I would suggest to everyone to get wise. You're on this channel. You're obviously looking into financial information. You should be creating your own retirement account. You can get into a passive income investment that's going to pay you today and it's going to pay you tomorrow. And that's what you need. Passive income. Not waiting for appreciation. You can do the whole appreciation thing, but that's not good for an individual who needs income. You're still working a 9 to 5. I assure you, the people who are waiting for appreciation of assets still work a 9 to 5. They are basically waiting for an opportunity to sell that asset, or they're waiting for retirement to sell that asset. Of course. Well, instead, you should be looking into passive income investments. I talked about this in my book. I talked about it in countless videos. But essentially what I want to suggest is that they're saving for retirement, but what exactly, or I should say they're not saving for retirement, but what exactly is that retirement account? They're generally looking at this as a 401k type investment, and that's a big mistake. I think that they should be, in fact, paying down their debt. That is the absolute most appropriate thing to do here, and they're not. They're not doing it. Big mistake. They should be paying down their debt, number one, and then getting into passive income investments. And you will in the long term. Look, if you were going to wait till you're 65 and you're currently 40 now, are you telling me you can't have 25 years to come up with a passive income investment? What's that retirement account going to provide you on a monthly basis? $1,000, $2,000? You're going to be taxed, right, at income, when if you did passive income investments, you'd be taxed at a lower level. Okay, maybe it's depends on where you live. Let's say a 15% instead. So instead of getting taxed at 30, you're going to be taxed at 50%. There's a lot of reasons why waiting for appreciation or waiting for your traditional retirement account, assuming that it's still going to be there, why that's a bad idea. Okay, now I have to move quickly. Spent a lot of time on this. Net worth. But I should just interject that I spent a lot of time on it because I think it's really, really important. Net worth by degree, verified assets and investments of loan applicants. You can see here, your Masters of Business Administration, people here in this field, according to this anyway, have a higher net worth and they have less debt than, for example, Doctor of Osteopathic Medicine, Doctor of Dental Surgery, and others. You could see here they broke it down. It's actually pretty interesting how much they have in investments, how much they have in debt, and how much they have in cash. And it seems to me that some people, for example here, an associate may not have as much income, may not have as much cash on hand or whatever, but they have a lot less debt. And having less debt means it's very easy to pay that off. Like if they're suggesting here $3,000 they could pay that off easily, and suddenly they can grow as long as they get out of debt, because debt compounds so fast. It is so fast, and it's done on purpose like that. If it's on their credit card or line of credit, these things could accumulate very, very quickly depending on the interest rate. U.S. home flips are at an 11-year high. Oh, that's just wonderful. I love hearing this type of information because the cycle repeats. And you can see here what has happened since the bottom. We are only heading higher and higher. U.S. home flips at an 11-year high. And this is when you know that we have a considerable problem, because people are looking around and they are suggesting that now is the time to get in, buy your real estate, flip it, buy more, flip it, and your problems will be solved. Big mistake. U.S. home flipping finance trends. You could see that here. Total finance purchase dollar volume and percent purchased with financing. Either way, we are rising. Of course, individuals need to purchase with financing because they don't have enough money and they can use debt. It's very cheap right now to borrow historically. So of course, they're going to do that. Switching gears. The GDP Now estimate. Now you heard that the GDP was going to be 5%. It's going to be amazing. Everything's so good. The economy is just booming. It's amazing. It's awesome. It's great. Okay. Enough with the BS, right? 1.9% now. They revised it downward to 1.9%, if I'm looking at this correctly. Well, you're looking at it a month ago. You're telling me it's 5%. I said specifically that they will revise this downward and continue to do so. They do it every single month. And look at where it has gone. Quite extreme. They said that this would have been one of the best months they've had in years. This was going to be amazing. It was, so great. And yet, no, it's a fake statistic, 1.9%. So the real rating is at least 1 to 3% lower than that. The move lower in the tracker came as several Wall Street banks also marked down their Q1 numbers Wednesday. JP Morgan cut its forecast from 2.5% to 2%. Goldman Sachs reduced its call from 2% to 1.8%. So, the original optimism from the Atlanta Fed specifically was based on hot ISM Manufacturing Index survey. Oops, a mistake the tracker has made in the past. That's right. Get everybody psyched up. Try to get the stock market boosted and then come to your senses. Does anybody believe this? Does anybody actually believe what we get from the mainstream media sources, from the jobs numbers, from the economic indicators that we see, the ones that are clearly fake, the unemployment numbers and things like that? Look, you want real unemployment numbers at the very least. If you don't want to look at, for example, John Williams' shadow stats, look at the BLS. They provide another number that's much more realistic than the U3. When you read unemployment, you're reading U3. Look at the U6. Just look at the U6. You can go to a search engine, type in BLS U6. That's it. You'll find it. It's on their own site. They calculate it, and you will see that the actual rate of unemployment is higher. Don't even look at the other ones that are recalculated based on how they used to do them. Don't look at that. Look at the U6. Suddenly you're thinking, whoa, so it's not so optimistic. That's what we need to do. We need to look at all of the economic indicators, not just 50-day moving average, 200-day moving average, and the current price of the stock market. That's silly. If you do that, if that's all you're looking at, you're making a big mistake, and unfortunately, you're going to get burnt. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.